Hey guys, I am here with Andy Gagliano with Gagliano Mortgage Group, and
Hello.
we want to give you a little tip, I guess, or insight about a different kind of mortgage program. And so we're going to talk about some reverse mortgages. Andy, I'm gonna let you take it away. What even is a reverse mortgage?
You know, I'm going to start like this because there are still a lot of misconceptions about reverse mortgages out there. The reverse mortgages from the 80s, 90s, early 2000s, that's not the reverse mortgages of today. Those mortgages then, the old reverse mortgages were really, I guess, I hate using this term when it comes to mortgages, but they were more predatory.
Yeah. My
Today's
dad
reverse,
actually said that today. That's wild. He literally used that same
yeah,
word.
yeah. And, you know, I guess I just hate using the word, even though it was a real thing back in the day,
Yeah.
and it still happens today, but we don't see it in mortgages nearly
No.
like we did before the real estate crash in '08. But the, so it's a bad word in my vocabulary, okay?
Yeah.
We're not, Gagliano Mortgage is not going to do predatory loans. So we don't do any of that stuff, but we do reverse mortgages, today's reverse mortgages, and where seniors were being taken advantage of in years past with the old reverse mortgages was
Mhm.
that, well, first of all, they were being sold a product as if it fit every senior, and it didn't fit every single senior. The other
Yeah.
thing was the loan to values were very high on those loans. And because of that, it became a situation to where those seniors were able to get into a negative equity position on those loans pretty quickly and pretty easily. Now, though, there's there's some protections in place for those seniors to where they cannot get into a negative equity position. Once the loan balance, well, first of all, they're not going to be able to borrow as much today based on the value of the house or for a purchase, the price of a house. That loan to value is going to be much lower, which means they're going to have a lot more equity in that property starting out from day one. Now, every single year, we hope and pray real estate prices go up. And so because of that, that little equity buffer gets increased with those reverse mortgages now. So we're still going to have that stop limit to where that senior will never be able to get into a negative equity position on their home, but there's also some protection for the lender. As real estate values do go up, they're able to bump that loan amount up, which means that there's a little more interest there that can be charged to the senior,
Mhm.
which of course, all of these loans have, they're a juggling act, and it's not just reverse mortgages, it's
They
every
all are.
mortgage.
Yeah.
Yeah. So it's got to be beneficial for the borrower or
Hmm.
buyer, and it's got to be beneficial for the lender, or they're not going to do the program. And
Well, yeah.
so with the new reverse mortgages, the government stepped in and really made what I feel like is a good concession that suits both the seniors and the mortgage companies in being able to increase that loan amount every year as the property value increases. And so, but yet still having that protection to not be in a negative equity position. So, all right, I'm going to continue to try to do this without getting too technical. So I've given the good news, and the good news is these mortgages, these reverse mortgages today are really good programs for certain seniors.
Mhm.
And the reason that they're really good programs for certain seniors is that it allows a senior to be able to either buy a home or refinance their existing home and potentially have no mortgage payment. Now, they don't require a payment, but what I usually say to our clients who get a reverse mortgage is, if you're able to, pay the interest portion of that payment, the interest only portion of that payment. Because that way, if you as a senior were to borrow, say, $300,000 on a reverse mortgage today, and every month you paid the interest that was due on that loan, the balance would never go up. The balance would be $300,000 from now until the time when the last person living in the home passes away. So that's a great way for a senior to be able to not ever get to where they're bumping up close to that negative equity position. But for those seniors who can make a payment, you know, I hear from them a lot. They say, well, I want to leave something to my children. So I want to leave my house to my children. And I'm putting all of my opinions aside because that's extremely important to a lot of seniors. They want to leave their children something, and I totally get that. So if they can afford it, making just that interest payment every month instead of making principal plus interest, or I'm sorry, interest plus principal, they make just that interest payment. The balance never goes up, but yet the property value continues to go up. So they're able to give their children more equity every single year as that property value increases. The loan amount stays the same.
That's awesome.
So again, if a senior is just barely getting by on what they've got, and we all know everything's going up, our electricity bills are going up, our natural gas bills are going up, our water bills, we're not even going to talk about that. Homeowners insurance, car insurance, groceries, our medications, everything is going up and up and up and up. So for those seniors who can't make those bills, or they can make those bills just pay what they need to survive every single month, but they can't make a mortgage payment on top of that, they can skip their mortgage payment and not have to make that mortgage payment. And in that case, the balance on their mortgage is going to increase every single month. And again, as long as they don't get to that point to where they're at negative equity, they're going to stay in their house until they pass away. And then at that point in time, their children, here's the way the old ones used to work. And a lot of seniors say this still today. They say, well, when I die, the mortgage company is going to get my house. And that's not the case. When they die, they're going to have up to 12 months. Well, excuse me. Their heirs are going to have up to 12 months where they can get that property through probate, get it on the market, and get it sold. So, and I'll throw this out there, this is never a guarantee, but mortgage companies still don't want that home. So as long as the heirs, most mortgage companies are going to let the heirs keep that property as long as the heirs are proving to the mortgage company, hey, we're trying to sell the property. It's on the market. It's fairly priced. You know, we're getting activity on it, but we just don't have a contract on it. You know, so most mortgage companies are going to work with them in that case.
That's good to know.
You know, in this market, and we don't know what things are going to be like in 5 years or 10 years or 20 years, but in this market, if a home's priced competitively and it's in good shape, it's not going to need 12 months to sell.
Well, no, it doesn't. And it's showing, it's coming back. We have multiple offers again.
Yeah.
Involved in
it's
one last
definitely
week.
happening. So, you know, what I would say to someone who's out there, a senior who thinks that a reverse mortgage may be a good option for them, is to call someone that they trust in the mortgage industry and have that conversation with them. You know, and what I told you before we started recording is and you know us well enough because we've worked on deals together,
Yeah.
we're never going to pressure someone. It either
Oh,
makes
yeah.
sense for them to do a reverse mortgage or it does not.
Yeah.
And if it does not, there's other options we can look at. We can look at a forward mortgage or a home equity line of credit or whatever, may suit that buyer best.
Mhm.
But at least have a conversation, get all the facts, and there's no hard and fast guidelines, I should say, when it comes to loan to value.
Okay.
So we often get asked, well, how much down payment would I need to put? And the question or the answer to that is, I don't know until we actually get an application on you, get your credit pulled, and can run it through the reverse mortgage system. And
Mhm.
it will come back and say to us, based on interest rates for today and your age, then here's what you can borrow. And so it's it's important to just take that first step. And once you take that first step, as a senior, you have to go through counseling with an independent party, which is another
Okay.
thing that the government added in there that I really like, because
Interesting.
that independent counselor is going to say to that senior, hey, here's how the numbers look for you.
Uh-huh.
And does this make sense? Is this something that you think will suit you? And the
Yeah.
senior has the option at that point in time to say no. And then we're done. So,
Yeah.
they have someone they trust, and then they have an independent third party who's not getting paid by the mortgage company to walk through the program with them and explain everything to them so that they're aware.
Wow, that's
So,
really good to know. Yeah.
yeah, lots of protections in place today.
Well, that's interesting because you're about to, underwrite my grandfather and all that kind of stuff. So we'll see if it actually works
Yeah,
and which way we'll have to go. So
yeah. And as far as the process on the reverse mortgages, it can take a few days longer. I would say maybe 5 or 10 days longer to go through the process
mhm,
compared to a forward mortgage where we don't have to do counseling and things like that. So, you know,
gotcha.
as well as I do, anytime we introduce a new person to the transaction, it causes about that much more of a delay in getting the thing done.
Oh
But
yeah.
what's the rush when it
No,
comes to
yeah.
a reverse mortgage? It's not like closing, for most people, closing tomorrow as opposed to closing 3 days after is not going to be a make or break deal for them.
Yeah.
So, no need to rush through that. But does that kind of help a little bit on?
Yeah,
Okay.
that helps a lot. Um, you've actually taught me a few things and yeah, so I think it's really gonna help. So we'll have to see. And I'm excited to actually, hopefully, if it works out, go through it and be able
Yeah.
to kind of document it if it works. So,
Yeah. Well, they're not scary deals. And the
okay.
thing is, well, I'll walk that back a little bit. Anything can be scary when it's unknown.
Yeah.
And so having that trusted resource that you can ask questions to and know still that you're going to go through counseling and be able to ask even more questions as you're going through the counseling session,
Mhm.
and I think once a senior gets through that counseling, all of their questions should be answered and they should feel comfortable about proceeding or not. And at that point, it's still their decision to make.
Yeah.
So,
Well,
yep. But taking that
uh,
first step, you can't go anywhere if you don't take the first step.
yeah, there's a lot of pieces of that first step too.
Yes. Yeah, there is. So anyway, it's a good option. It's called, well, there's a HECM for purchase. So that's a home equity conversion mortgage,
Uh-huh.
HECM, a HECM. So we love our acronyms in the mortgage industry. Lord knows we have a million of them, but
Yeah.
a heck on for purchase. So that's a good option for a lot of seniors out there. But yeah, again, I'm glad to help out anyone who has questions about that. They can reach me at 205-979-4412 extension 1. And if they want to talk to you about showing them that perfect house to buy, then how are they going to be able to get in touch with Izzie?
They are going to reach out to me at 205-332-4204.
All right, awesome. So we're doing this again next week?
Yeah.
Yes. And you've already got next week's topic picked out, I know, so I'm looking forward to going over that with you.
So, yep, I do.
All right, awesome. Well, Izzie, do you have any other questions, or you think we've covered everything well enough today?
I think we covered the basics for today, and we can kind of build on that. So
Awesome. All right. Thank you, Izzie. I appreciate the opportunity to do this video with you, and I look forward to seeing you next week.
sounds good. Talk to you later.
All right. Bye.